Hello and welcome guys and welcome to this short vlog. And yes, in this particular vlog, I'm going to discuss a very important amendment which has been introduced in the capital gains chapter, which is applicable for June 25 and December 25 attempts. I have already created a video on the whole gamut of amendments which have come in the direct taxation paper. Link to that video shall be there on the I button above. But this particular video is dedicated to only one amendment. I'm going to discuss only one amendment which is applicable for June 25 and December 25 attempt. And I feel that since it's a recent amendment and it is more relevant for June 25 and December 25 attempt, so this particular amendment needs a lot of emphasis. It needs a lot of practice. And in this particular session, I will be explaining the entire amendment and we'll be doing some practical questions also relating to this particular amendment. If you want to see the video in which I have discussed all the amendments of direct taxation, there's a separate video. Link will be given either in the I button or in the description box below. So let's start this critical amendment which has come in capital gains chapter. And yes, the first and foremost change which has come by in the capital gains chapter is the definition of long-term and short-term capital assets. Earlier, there were three slab rates according to which long-term and short-term capital assets were classified. But now there are only two slab rates. There are only two brackets which will qualify your assets into long-term and short-term capital assets. So if you look at this particular chart, this will give you the brief of the amendment which has come by in this particular regard. Okay. So the only changes earlier, these any other assets was coming in the third category, which is 36 months. But now this has been eradicated and all the assets, all the other assets, apart from equity or preference shares, debenture, government securities, equity oriented mutual funds, zero coupon bonds, apart from these assets, all other assets are qualified under only one category, which is above 24 months or below 24 months. These are the only two brackets which are available for qualifying your assets into long term and short term now. So no relevance of 36 months threshold. It is not there as of now. Now, one very critical point which is required to be noted over here. This amendment takes effect from 23rd of July 2024, which means this amendment will be applicable only for the assets which have been sold on or after this particular date. If your asset is sold before 23rd July 2024, then still you will be covered under those three slab rate regime. Now, yes, sir, do we need to remember the old as well as the new classification? Yes, you need to remember the old as well as new classification. If the examiner gives you that your asset, suppose jewelry, is sold on 20th July 2024, then it will be clubbed under long term or short term, whatever, under the 36 months criteria. Yes. And if the jewelry is sold on 25th July 2024, then the jewelry will be classified as long term or short term according to 24 months criteria. So yes, this is a extra point to be remembered by June 25 and December 25 students. And yes, these amendments are equally important for CMA final students as well. Okay. So first and foremost important amendment in capital gain, the change in definition of long-term and short-term capital gains. This is how the change will take place. 36 months criteria has been eradicated with effect from 23rd July 2024. Now we come on to the next amendment, which is the tax rates. Yes. Tax rates have been revised again with effect from 23rd July 2024. So yes, again, same thing that, if the capital gain has arisen before 23rd July 2024, then old tax rates will be applicable. And if capital gain has, accrued to that particular individual or company or whatever after 23rd July 2024, then new tax rates will be applicable. So this is actually a very big, sort of a pain point. Yes, guys, this is a pain point for sure that you have to remember two different tax rates. But to the best of my knowledge and belief and to the best of my experience, most likely the examiner is going to ask you the new tax rates only, which means after 23rd July 2024, most likely. Okay, but nothing is certain. So I would recommend all of you to remember both the old as well as the new tax rates. In this particular chart, I have denoted the old tax rates in green font and the new tax rates have been given in the yellow font. Okay, yellow means new tax rates, green means old tax rates. So that is the bifurcation which is there in this particular chart. And yes, I'm going to focus more on the new tax rates. Okay. Now we talk about the short-term capital gain. If you talk about short-term capital gain, then if STT is paid on your securities, or transfer is there in foreign exchange, which is in the recognized stock exchange located in IFSC, which is International Financial Service Center. If your stock exchange is located over here and transaction happens through this, and even if STT is not paid, even then in both these situations, A, STT paid, B, STT not paid, but the transaction goes through the IFSC recognized stock exchange, then the tax rate is 20%. Earlier, the tax rate was 15%. Apart from this category of assets, any other assets where short-term capital gain arises, usual tax rates will be applicable, which means slab rate in case of individual HUF, for company the fixed tax rate, for the firm fixed tax rates, whatever the usual tax rate which we had already studied, those will be applicable to you. Now comes the biggest amendment, and yes, the most critical amendment according to me. If the examiner is going to give you this amendment, then he'll not focus on short term, he'll focus on long term, because there's a huge change in the long term capital gain tax rate. What is the change? We're going to study it now. All right. So first of all, long term capital gain, I'll bifurcate into two kind of assets. One, securities, and other assets. Okay. Other assets include all other assets, land and building, jewelry, any kind of intangibles, everything is covered under the other assets. Okay. Now securities are further bifurcated into two parts. First, specified securities. Specified securities means equity shares, equity oriented mutual funds, and units of business trust. These are specified securities. And other non-specified securities, which are usual securities like unlisted shares of a company, unlisted preference shares, unlisted equity shares, or any other securities are covered under the others. Whether it is specified securities or it is non-specified securities, long-term capital gain will be charged at a constant tax rate of 12.5%. That is the huge amendment which has come by in the recent in the budget, which is applicable for June 25 and December 25 students. Long-term capital gain 12.5%. Not only this, any other asset which is facing a long-term capital gain, constant tax rate is 12.5%. So in effect, tax rate has been reduced. Earlier, the tax rate was 20% or 10% with or without indexation. And in any other kind of assets, the tax rate was 20%. So it has been substantially reduced to 12.5%. But as it is said, no meals are free in this world. No lunches are free in this world. Government has given you a benefit of reduced tax rate, but has withdrawn a substantial benefit, which is indexation. No indexation will be applicable henceforth, which means starting from 23rd July 2024, no indexation will be applicable on any long-term capital gain. And it's a big blow. It's a big, devastating factor for many people, because indexation used to substantially reduce the long-term capital gain. But since the tax rates have been substantially subsidized, therefore, the benefit of indexation has been withdrawn. So no indexation applicable henceforth, and the tax rates have been dropped down to 12.5% per annum for the capital gain. Sorry, for the capital gain. Okay. So this is the long-term capital gain scenario. Now, as soon as this amendment came by, there was a big hue and cry from the people who have ancestral properties and properties which are bought long back, and they were expecting and hoping that they would get indexation benefit then when they sell off these properties, and they will be able to substantially reduce their capital gain tax. This was the expectation. So there was a huge hue and cry which was there for that category of people, at least. For them, an exception has been carved out in the section. For them, indexation benefit has still been retained, but only if you fulfill 4 criteria. So general rule is no indexation for long-term capital gain. That's the generic rule. But there's an exception which has been carved out. If you fulfill 4 criteria, then you will be allowed indexation benefit also. What are these 4 criteria? Let's study. A, the capital gain should have arisen on long-term capital gain. The long-term capital gain should have arisen on land or building or both. No jewelry, no shares, no any other kind of asset. No, only capital gain which is accruing on land, building or both. Number 2, the land, building or both should be bought before 23rd July 2024. So this this exception has not been carved out for future purposes. This is just a grandfathering kind of a clause, so that the benefit which shall accrue to people who have already bought their properties before 23rd July 2024, it shall only be applicable to those, not for future purchases. So property should have been bought before 23rd July 2024. Property should have been sold after 23rd July 2024, because if you sell your property before 23rd July 2024, indexation is already available. Indexation has been withdrawn from 23rd July 2024. So the property should have been sold after 23rd July 2024. And lastly, the exception has been carved out only for resident, individual or HUF, no company, no partnership firm, no other kind of person. So if you fulfill these four criteria, then you get an option A. Without indexation, you can get your capital gain tax at 12.5%, or with indexation, you can get your capital gain tax at 20%. Of course, surcharge, education cess, if any, shall be applicable accordingly. So this is the exception which has been carved out, and to my mind, if at least if I am the paper setter, then I will definitely give a an adjustment for this particular exception which has been specially carved out for grandfathering the benefit of indexation to the people who have already bought their properties long back and they want to sell after 23rd July 2024. So this is the gist of the amendment which has taken place in long-term capital gain. Now, one very important thing which is to be noted over here, and at that time I should have asked you this question. So, when both the securities are taxed at the common rate, then why bifurcation is there between specified securities and non-specified securities? Why this bifurcation is there? Reason is that for specified securities, there is an exemption, 1.25 lakhs. Earlier, this exemption was for 1 lakh. So if you sell your specified securities, then up to 1 lakh rupees, you didn't have to pay taxes. But now this exemption is enlarged to 1.25 lakhs. So up to 1.25 lakhs, long-term capital gain on specified securities, no taxes required to be paid. That is another amendment which has taken place. Okay, sir, got it. But sir, let us tell you one very important thing, sir. Unless and until we do one practical question now, we won't be able to really get the gist of it. So guys, the idea of this particular video was this only. I'd already made a video on the amendments, but the idea of this particular video was this only, that let's do a practical question so that we are able to understand the nitty-gritties of this kind of a amendment which has taken place. So, this is a 5-pager document which I've created especially for capital gains. The entire amendment has already been provided to you. The link is given in the description box below for all the provisions of direct taxation, and PDF has already been provided to you. If you want this PDF also, then please click on the link which is given in the description box below and you will get this PDF also. If you do this PDF, then I think capital gain amendment will well be taken care of, and any kind of question which comes in the examination will well be solved by you. So no problems at all. Okay, sir, got it. Let's start an illustration on this particular amendment. Miss Revati purchased gold jewelry worth 3,25,000 in January 2022. In October 2024, the gold prices increased and she decided to sell her jewelry on 31st October 2024 for 4,75,000. She also sold her house property in Delhi on 1st December 2024 for rupees 80 lakhs. The stamp duty value of property at the time of transfer was 90 lakh rupees. She purchased this property on 15 July 1998 for 8,80,000. The FMV of the property as on 1st April 2001 was 10,80,000, and the stamp duty value has also been provided to you for 1st April 2001, which is given as 10 lakh rupees. She had incurred brokerage and other expenses, 1% on purchase price at that time. Compute the capital gain tax to be paid by Ms. Revati for assessment year 2025-26, assuming her other income exceeds the basic exemption limit. So you have to compute the capital gain tax. Now, of course, whenever I see a lot of dates, one thing that we definitely need to make is a line chart. If we prepare a date chart of significant dates and we jot down all the dates over there, then guys, we'll be able to solve this question in a better manner. Okay, so let's prepare this date chart where we are going to jot down all the dates, all the significant dates which have occurred in this particular question, and then we are going to compute our capital gain. Okay, so got it. That's a date chart. And guys, in examination also you can prepare this date chart. It will really be useful to you if you prepare this date chart. The examiner is also going to be happy. The paper checker will also be going to be happy because he will understand that you've really melted down the entire question into small parts. So it's really a useful practice to do. All right, sir. So let us jot down all the dates which are given in the question. All right, the property. First of all, the property has been purchased when? 15 July 1998. So the first date that I'm going to write is 15 July 15 July 1998. 15 July 1998, property has been purchased at the value of 8,80,000. Property purchased, property has been purchased for 8,80,000 plus some bit of brokerage has also been paid. Okay. Some bit of brokerage has also been paid. So this is the purchase which has been done on 15 July 1998. Perfect. Now we talk about 1st April 2001. Okay, this is a critical date because whatever purchases are made before 1st April, we compare their purchase cost, cost of acquisition with the FMV as on 1st April. You already remember that, section 55. Okay, sir. So on 1st April, the FMV of this property has been given in the question as 10,80,000. And the stamp duty value. So FMV cannot be more than stamp duty value. We already know that, 10 lakh rupees. Okay. Stamp duty value is 10 lakh rupees. 1st April 2001. All right. Okay, sir. Now we come on to the jewelry. Jewelry has been purchased on January 2022. So in January 2022, jewelry has been purchased. What is the value of the jewelry which has been purchased? Jewelry has been purchased for 3,25,000 rupees. 3,25,000. Okay, jewelry has been purchased in January 2022. Then jewelry has been sold. Okay, jewelry has been sold on 31st October 2024. 31st October 2024. Jewelry sold. Jewelry has been sold for 4,75,000. For 4,75,000, the jewelry has been sold. Let me make some space for the other arrows as well. So guys, this practice of making line charts in your entire direct taxation will really benefit you a lot, because you will be able to know the transaction well, and then you will be able to solve the question in a better manner. This is what I believe. So 31st October 2024, jewelry sold for 4,75,000. All right. Now, in the month of December, okay, what is the date in December? The date is 1st December 2024, the property has been sold. Okay. So 1st December 2024, property has been sold for 80 lakh rupees. On 1st December 2024, the property has been sold for 80 lakh rupees. And finally, our year ends on 31st March 2025. Our year ends. Okay. So now the capital gain is required to be computed for two transfers. Two transfers have been taken place. First transfer, jewelry has been sold. Transfer number 1, jewelry has been sold. That is the first transfer which has taken place. Okay, second transfer is property has been sold. And please note, both the transfers have taken place post 23rd July 2024. Both the transfers have taken place post 23rd July 2024, which means amended provisions will apply in both these transfers. That is very important point to be noted. And capital gain is required to be computed for both these transfers. Okay, sir, got it. So guys, if you prepare this kind of a line chart for every capital gain question, then you will be able to understand the entire context well, and you'll be able to understand the the sequence of events well. So this is a very good way to understand the sequence of events. Okay, sir, got it. Okay, so now we need to calculate the capital gain. A in case of jewelry which has been sold, B in case of house property which has been sold for 80 lakh rupees. That is the ask, that is the question. Okay, now I've already created a format for all of you. Okay, obviously this format will not be available to you in the examination. We just have to fill in this particular format, but after this session is over, I would sincerely recommend you to prepare this particular format on your own in your register so that you're able to practice well. Okay, please don't just fill this format and say, oh, I've done my amendment. That's not good. All right, first of all, let's talk about jewelry. So jewelry, the sales consideration of jewelry is 4,75,000. The sales consideration of jewelry is 4,75,000. So jewelry has been sold for 4,75,000. That is the sales consideration of jewelry. Now think about the cost of acquisition of jewelry. Cost of acquisition of jewelry was 3,25,000. Now the question is whether this is long-term capital gain or it is short-term capital gain. Whether it is long-term capital gain or it is short-term capital gain. So it was purchased in the month of January and has been sold in the month of October 24. January 22, October 24. So January 22, January 23, January 24. 2 years and few months. 2 years and few months. So 3 months has not been completed. 36 months have not been completed. But guys, under the amendment, there is no slab rate of 36 months. It is only 24 months. So if 24 months are completed, then it will be termed as long-term capital gain. If 24 months have completed, and yes, 24 months have been completed. Now, point to be noted over here. Had this sale taken place before 23rd July 2024, which means let's assume that this sale had taken place say on 3rd of May 2024. Suppose this sale had taken place on 3rd of May 2024, then guys, this sale would have been categorized as short-term capital gain because it was pre the amended scenario. Now, very important point to be noted over here. Now, there's no 36 months timeline. It was there in the erstwhile law. Now, the law has been amended. So, it's only 24 months timeline. And therefore, this capital gain is long-term capital gain and not short-term capital gain, even when it is less than 36 months, because 36 months is no more the criteria now. So, this is long-term capital gain because 24 months has elapsed. Okay, sir, got it. Okay, so this is the long-term capital gain which has taken place. So, the capital gain is calculated like this. 1,50,000 is the long-term capital gain. 1,50,000 is the long-term capital gain. Please write in the comment section below if you have understood this point. So just write, yes, sir, we understood this point in the comment section below. And guys, if you face any problem in understanding the concept or you have some specific query about this concept, please jot it down in the comment section below. I'll be able to answer it for you. All right. So now let us go on to the more technical and more interesting part, sale of house property. Of course, there's no doubt that this sale of house property is long-term capital gain because it was purchased way back in 1998. So there's no doubt that this is long-term capital gain for sure. Long-term capital gain is applicable over here. But now I would definitely want to explore the idea of taking indexation benefit in this particular property if I fulfill the 4 conditions. I would definitely want to explore that idea because I know no indexation, 12.5% tax rate. That's perfectly fine. Okay, I know that idea. But I would want to explore if all these conditions are satisfied, then I get this choice, whether I get this choice over here or not. Let's explore. A. The transfer should be of land and building or both. Yes, condition fulfilled. My transfer is also of a house property. Perfect. Number 2, bought before 23rd July 2024. Yes, it was bought way back in 1998. So yes, it is very much bought before 23rd July 2024. Criteria number 3, sold on or after 23rd July 2024. Absolutely yes, criteria met. After 23rd July 2024, this property has been sold. It has been sold in October 2024, December 2024. Last but not all the least, should be done by a resident individual. Yes, I would assume Revati is a resident individual. For sure, I'll assume that. Okay. So all the 4 criteria is met. Yes, all the 4 criteria is met. So do I get covered under the exception? Yes, I do get covered under the exception. So do I get a choice? Yes, I get a choice. Without indexation 12.5% or with indexation 20%. Whichever is beneficial to me, whichever is beneficial to the taxpayer, I'll choose either of the 2. Perfect, sir. Let's compute capital gain in both these scenarios and let's see what is more beneficial to us. Okay. What is the full value of consideration? It is 90 lakh rupees. Is there any cost of transfer? No, there is no cost of transfer. But there's one very important fact which is required to be noted over here. Fact is that, while we are selling it at 90 lakh rupees, but guys, the all right, yes, the property has been, although it has been sold at the rate of 80 lakh rupees, but the stamp duty value of the property at the time of transfer was 90 lakhs. This is the point to be noted over here. Stamp duty value is 90 lakhs. So as per section 50C, if stamp duty value is more than 10% of 10% addition to the actual consideration, then stamp duty value is taken as the full value of consideration. This is what we have studied in section 50C, right? So now the actual sales consideration is 80 lakh, but we'll ignore it. Why? Because 80 lakh plus 10% is 88 lakhs. The stamp duty value should not have been more than 88 lakhs. But in this case, it is. So government is assuming that stamp duty value will be the full value of consideration. This is an assumption which government of India is putting in. And very fairly so, very, aptly so. If you are selling your property at a lower rate, or at least you are showing to government that you are selling at a lower rate, government is going to assume that stamp duty value is your full value of consideration. So under that assumption, 90 lakh is the full value of consideration that we have assumed in this particular question. Okay, so 90 lakh is the full value of consideration. Now, cost of acquisition. Okay, this asset was acquired way back in 1998, where the cost of acquisition was 10 lakh rupees. Sorry, 8,80,000 rupees is the actual cost of acquisition, plus brokerage has also been paid. What is the ratio of brokerage? I think 1%. Yes, 1%. 1% is the brokerage which has been paid. So, somewhere around 8,88,800 is the acquisition cost. But this cost is quite less as compared to the FMV as on 1st of April 2001. So FMV is more. So the principle says that if your acquisition is before 1st April 2001, then whatever is a higher value, higher of actual cost of acquisition, or the FMV as on 1st April 2001, whichever is higher is to be taken as the cost of acquisition. But this has to be subject to a principle that the FMV cannot be more than stamp duty value. FMV cannot be more than stamp duty value. It is subject to stamp duty value. You cannot say that, oh, fair market value of this property was 10,80,000, but my stamp duty value was 10 lakh at that point. No. The fair market value has to be curtailed up to the stamp duty value as per section 55. So what is the cost of acquisition in this case? The cost of acquisition will be taken as 10 lakh rupees, because 10 lakh rupees is lower than 10,80,000 rupees. So what is the cost of acquisition that we are going to assume? The cost of acquisition will be 10 lakh rupees. The cost of acquisition will be 10 lakh rupees, which is higher of actual cost of acquisition including brokerage and lower of fair market value as on 1st April, or the stamp duty value. So according to this formula, we get a cost of acquisition of 10 lakh rupees. So what is the capital gain? Capital gain is 80 lakh, and what will it be classified as? Long-term capital gain. This is long-term capital gain. So what is the total capital gain which is chargeable to tax? Total capital gain which is chargeable to tax is 81,50,000. This is the long-term capital gain which is chargeable to tax, 81,50,000. So, but what about that choice? That choice we are going to exercise when we will compute the tax. Okay, choice of with indexation, without indexation, that we are going to calculate when we are calculating the tax on capital gain. So yes, now let us calculate the tax on capital gain. So very simple, the jewelry will be classified as long-term capital gain, and the tax which will be applicable will be 12.5%. Straightforward computation is there. Okay, so 1,50,000 is the long-term capital gain on jewelry. 12.5%, the tax rate comes out to be 18,750. 18,750 is the tax which will be paid by the taxpayer on the jewelry. Now let us calculate the tax which is required to be paid on the house property, and now we are going to compare the two options which is provided to us: A, without indexation; B, with indexation. Okay, what will be the value without indexation? What will be the value with indexation? That is what we are going to compute now. And yes, this is how I'm going to calculate with indexation, without indexation. Whichever is more beneficial to me, I'll take that value. Okay, because I am covered under the exception to the new amendment. Okay, sir, got it. Okay, all right. So now, what is the full value of consideration in case of the house property? It is 90 lakh. We have already seen it. Why have we taken as 90 lakh? I've already discussed the reason, logic behind it to you. Now we have to take two things. Okay, with indexation cost of acquisition over here, without indexation cost of acquisition over here. Over here we'll take the with indexation cost of acquisition, over here without indexation cost of acquisition. So without indexation cost of acquisition will be 10 lakh rupees. I already know that. Okay, so I'll write it over here. There's no calculation which is required to be done. But with indexation, calculation will be there. Yes, sir. With indexation calculation. Okay. With indexation calculation will be 10 lakh rupees cost of acquisition multiplied by 363, the CII of the current financial year in which the sale has happened, which is 24-25 financial year in which the sale has happened. Okay. 363. And 100 will be the CII of 1st April 2001. So 100. So what will be the cost of acquisition in this case? 36 lakh 30,000. 36 lakh 30,000 will be the cost of acquisition in this particular case. Indexed cost of acquisition. Okay. So this will be a dash, this will be a dash. Now what will be the capital gain? Capital gain in this case is 80 lakh rupees. Without indexation, the tax rate will be 12.5%. With the indexation, the tax rate will be 20%. What will be the capital gain in this particular case? So 90 lakhs minus 36 lakhs 30,000, 53 lakhs 70,000. 53 lakhs 70,000. If you multiply it by the relevant tax rates, 10 lakhs 74,000 in the first case, 10 lakhs 74,000 in the first case, and 80 lakh multiplied by 12.5%. 80 lakh multiplied by 12.5%, 10 lakh in the second case. 10 lakh in the case. So what will I choose? I will choose this option. This option will be chosen by me because there is lesser tax in option number 2. Lesser tax, so this will be chosen. Okay. So please write over here, lesser tax liability. Hence, this option will be chosen. Lesser tax liability, hence this option will be chosen. So I'll take the value without indexation and I'll use the tax rate of 12.5%. That is how I'm going to compute it. Okay. All right. So tax on long-term capital gain of house property, it will be 10 lakh rupees. It will be 10 lakh rupees. So tax on long-term capital gain will be 10 lakh rupees will be the tax liability, and the tax liability on jewelry is 18,750 rupees. So what is the total tax liability? Total tax liability will be summation of these two, which is 10 lakh 18,750. In this particular case, guys, the income is above 50 lakhs. The income is above 50 lakhs. So will there be a charge of surcharge? Absolutely yes. Surcharge will be levied in this particular case. So 101,875 will be the surcharge. So total tax will be 1120625. 1120625 will be the tax including surcharge, and of course the cess will also be applied to it, 4%, 44,825. That is the amount of cess, and the total tax is 1165450. 1165450. This is the total tax. 1165450 will be the total tax. So what is the total tax? This is the total tax which is being computed. And guys, this is how the examiner is going to test you on this amendment which has come by. So please be prepared, because I feel that since it's a recent amendment, it's an important one in the June 25 or December 25 time, both in CMA Final and CMA Intermediate. This amendment will be tested by the examiner for sure. Okay. This PDF is saved in the description box below. And again, to reiterate, I have made a detailed video on all the amendments which have taken place in DT, and the link is given in the description box below as well as the I buttons. Please see that detailed video for all the amendments. This video is specifically dedicated to one amendment which has come in capital gain, which is the period of holding and the change in tax rates. So practical question as well as theoretically, I've discussed this particular amendment with all of you. I hope and pray that this amendment comes in the examination and you solve it and you say, yes, sir, this was it. On that positive note, all the very best and happy studying.